the answer for the first question. Apply the rules. These are simple questions, but little confusing. The taxpayer's salary is reasonable for the services she provides to the escort. Based on the following information, how much will the taxpayer be reporting as self-employment income? It's a very simple, straightforward question. What is included in self-employment income? Salary from an S corporation. Yes, no, guys? Salary from an M. Remember, salary is employment income, never self-employment income. S corp's ordinary income. It's an S corp. Obviously, the ordinary income will not come because it was not self-employment income. Just give me the figures and give me the answer. Give me the answer, right? P5, and then give me the answer choice. A, B, C, or D. Right? 5, and then give me the answer choice A, B, C, and D. The director's fees is self-employment income. Schedule C, net profit from sole proprietorship, is net self-employment due to cessation of business. So my business closed, and while I was waiting for some other source of income, I also got money from my insurance company to substitute my lost earnings. This is taxable, guys. Partnership income, I don't care whether it's an active or an inactive general partner. I will still be including it as a part of my self-employment income. Guaranteed payments, maybe even from a limited partner, but I will still include guaranteed payments. And add all of this and tell me the answer. Just add all of this and give me the answer. So it's 21,500 C. Straightforward, a little confusing. Please make it a point that you will try to register what is included, what isn't included in self-employment income. Go to the next question. It's an easy question, and I hope to get an answer from you guys on this. For self-employment tax purposes, which of the following is not considered earnings from self-employment? Net profit of a day operated by a sole proprietor. Now, this is something like an eatery with exclusive goods, for eating. So it's a kind of a business. So net profit from a business operated by a sole proprietor. Salary received. This is easy now, right? Any kind of salary will never be included. Guaranteed payment will always be included. Distributive share as a general partner will always be included. Net profit will always be included. Salary will not be included. Question 7. Which of the following individuals is not subject to self-employment taxes? Give me the answer for this. I think and I hope that you should be able to give me the answer for this. Give me the answer for the 7th question. Which of the following is not included? Which of the following is not included in self-employment income? Very good. Real estate dealer providing services will be included. General partner having guaranteed payment will be included. Patrick, a corporate director receiving fees as director, will be included. Corp's share of income will not be subjected to self-employment taxes. And that is the biggest delta between S Corps and partnership. That's the biggest delta providing services, right? S Corp. See, the money that you make from an S Corp will not be liable for self-employment income. That's the reason an S Corp is a business form compared to partnership. Next question. Let me see who answers this correct. The taxpayer operates his health food store as a sole proprietorship out of a building he owns. Based on the following information regarding year 2, due to self-employment income for year 2, gross receipts obviously will be there. From there, you're going to reduce the cost of goods sold of $49,000. Utilities obviously will reduce of $6,000. Real estate taxes, you will reduce. Gain on sale of business truck. Will you reduce this? Will you not reduce this for determining your self-employment income? Yes. Will you reduce this? Gain on self-employment, gain on sale of business truck. Now, this is Schedule D. Okay. This is schedule. So this is add, this is minus, minus, minus. This will not be included because this will go to capital gain, Schedule D. Depreciation would be a minus. Section 1 is a kind of depreciation, guys. We go to this in more details when we go to capital gains and depreciation. But Section 179 is like 100% deduction if you have acquired a business property for a particular year and if you've met with certain requirements of the law. So this is also kind of depreciation fee. Okay, just remember for this till the time you've done capital gains, Section 179 expense is kind of depreciation expense. Mortgage interest on buildings. Yes, no, yes, no. I have a factory building. for which I have taken loan and I'm paying interest on that. Yes, it is a business expense. I'm a sole proprietor and I'm paying for my retirement plan, not a business deduction. Any kind of an operating losses that I have taken for last year will not be adjusted in order to calculate the self-employment income this year. How much taxes you will pay, it will depend, but how much money you've made from self-employment will not include the set-off of last year's losses. So just calculate this and tell me what is the final figure coming. So don't take this. Take all the others. Everything else is a minus except from gross receipts. Tell me what is the figure. That would be the answer. I think the answer is D, 31,000. Just calculate it and tell me, are you able to get this? Here, next question. What is the taxpayer's self-employment income on Schedule E for year 1? This will not be scheduled. When is a partner in cash is a calendar year taxpayer whose partnership year ends on June 30th. For the partnership year ending 30th June year 1 is distributive sharing, but the money that you're making from partnership that will also be taxable as self-employment income in your hands. B is a partner in cashew is a calendar year. That means the year is calendar. Cashew's partnership year ends on. So this is the tax year ends on 31st of December. The partnership in which he's a partner would end on June 30th. For the partnership year ending June 30th year 1, Ben's distributive share of partnership profits was $4,000. So see, look at this. So this is June 30th year 1. This is June 30th year 2. This is for partnership. That means partnership. And I'm a partner and my year ends on December 30th year 1. Again, December 31st year 2. Ben's distributive share of partnership profit is 4,000 for year 1. So in this year, this guy got 4,000 August 20th year 1. That means the same year before Ben's. So this is Ben, okay? This somewhere, August 20th, Ben dies and his estate succeeds to his partnership interest. The money goes to the estate. When you're going to do inheritance taxes, you will see the moment a person dies, immediately the property of that person vests in the estate and there's an executor who is for the partnership year 30th June year 2, Ben and his estate's distributive share is $6,000. Now from this period, the company earned 6,000. That means Ben's portion of the money that he has been earning is 6,000. You are supposed to tell me what is Ben's self-employment income for the year 31st December year 1. Now see, you go to the provision and they tell you that the money that you have to take will include the money till the end of the month of death. This guy was not alive after August, right? So after June, July and August, 2 months this guy earned. So in the final income tax return, the money that will be paid for self-employment taxes can only be the money that would be earned by Ben when he or she is alive. But we don't do it to the date of death, we do it to the month of death. So 6,000 you earn for 12 months, for 2 months, which is July and August, because this guy died in August. You earned 1,000. So 31st December, when you're filing your return, you will include 4,000 till 30th June, and you will include 1,000 till the period of death. So total becomes 4,000 plus $1,000, which is 5,000, which will be taxable in your hands. I'm reading the provision here for you to understand what I just did. A dissident partner includes partnership income or loss through the end of the month. That means we did full July and we did August. Even though this guy died on 20th August, we did not get 6,000 for the number of days depending on the date of death. It was the end of the month of the death. Remember, not the date of death, not the date of. So I took it for 2 months at the end of the month of the death. On what? On the final return of the dissident. So the final return that will go for 31st December for the partner Ben would include his money or his share till the month end of the date of the year of death. Income in the year of death includes partnership income for the partnership year ended during the decedent's tax year. That means we took 3rd June year 1 tax year plus any partnership income after that up to the end of the month of that. So we took 4,000 for 30th June year 1 and then we took months' income proportionate, which was 1,000, which included July and August, which was the month of. Is this clear? So the answer for 9 becomes 5,000. It's a special provision. Now see, I am not too sure of all of these special provisions, how much will be questioned in your exam. But my suggestion is the basics should be very strong. What is self-employment income? What isn't self-employment income? That is extremely important. These are some very specific provisions which I don't think will be questioned that much, but but you will still have to do it properly because it's a part of your syllabus. But given a choice, I don't think that they're going to dig on these concepts really well. So this is an exceptional question for a very specific provision which says that when a person is dying, and the partnership is year ending on in between that year, which is his financial year. In this example, if you see, the individual partner's tax year ends on 31st of December, but before that, this guy dies. So there's a final return that will be given in with respect to this person. That final return will include the money that is being generated for the year 30th June, plus it will also include 2 months money that was earned by Ben before his death. The balance 4,000 will go to the estate of Ben. So for income tax purposes, there will be 3 returns. You will see that there are 3 returns that is filed with respect to a decedent. One will be the final income tax return of the decedent. One would be the estate's income tax return. And the third would be the beneficiary's income tax return if the beneficiary would have received some money. This is related to a particular provision. So my suggestion is will not be very wrong to write question 9. So this was question 9. Next question. Which of the following is true regarding their self-employment tax computation? 1 second. Great. Read slowly. See, there's a reason why these questions are given to you guys, right? Martha has a small business that has a profit of 15. Our husband Harry has a farm that has a loss of $7,000. Which of the following is true? Is set off possible? The answer is set off not allowed. Why? Because these are separate businesses. So yes, the answer is D. Why? Because there is a loss, there is a profit, but you cannot set it off if there are separate businesses. Again, a very specific provision. You need to understand this. So you can say refer question